to Finance Pulse. Tonight we are tracking the stories shaping the global business landscape, from Apple's unexpected surge in China to a new slump hitting the crypto market and a major Wall Street name expanding its footprint right here in the Middle East. And later, our deep dive breaks down the escalating fight between Disney and YouTube TV, a standoff that has plunged millions of viewers into a blackout and sent Disney shares tumbling. Let's begin with the top headlines of the day. In China, Apple has pulled off an early win in one of its most important markets. New data shows that iPhone sales jumped 22% in the first month after the launch of the iPhone 17 series. That surge comes even as the broader smartphone market softened, highlighting how strongly Chinese consumers responded to Apple's new lineup. Nearly 4 out of every 5 iPhones sold during this period were from the iPhone 17 series, according to research firm Counterpoint. For Apple, which has been fighting intensifying competition from Chinese brands and geopolitical headwinds, this is a crucial sign of momentum. The crypto world is under renewed pressure. Bitcoin has fallen deeper below the $100,000 mark, slipping to just under 98,000 as fresh risk aversion sweeps through markets. A sell-off in tech stocks has reignited concerns on Wall Street, and the ripple effects have reached crypto. The slump has now wiped out more than $450 billion in market value since early October. What's worrying analysts is that traditional sources of support, from large investment funds to corporate treasuries, have stepped back. Without that cushion, volatility has intensified, raising questions about how long this downturn could last. In Dubai, JPMorgan is expanding its presence as it ramps up a global push to work more closely with medium-sized companies. A senior executive confirmed that the bank has quietly added to its local operations, aiming to deepen its reach across the Middle East and into emerging markets. The move is part of a broader strategy that has seen JPMorgan increase resources in mid-cap coverage across Europe as well. The bank is also weighing a larger footprint in Turkey. For competitors like Citigroup, it signals growing competition in a region where demand from mid-sized corporates is accelerating. Now to tonight's deep dive. A battle between Disney and YouTube TV that is reshaping the streaming landscape and raising new questions about the future of live television. Disney's channels vanished from YouTube TV on October 30th, leaving roughly 10 million subscribers without access to ESPN, ABC, FX, National Geographic, and more. The blackout comes at a critical moment, especially for sports fans who are in the middle of peak football season. According to Variety, the dispute centers on fees. Google says Disney is demanding a sharp increase in retransmission payments. Disney argues that YouTube TV refuses to pay a fair price for the value of its channels. The timing could not be worse for Disney. The company's latest quarterly results show strong performance in theme parks and streaming, but traditional TV continues to drag down the numbers. Revenue for the quarter came in at $22.5 billion, slightly below expectations. The stock dropped more than 8% on Thursday, adding urgency to the standoff. The financial strain of the blackout is already becoming clear. Analysts estimate that Disney is losing around $30 million per week with its networks pulled from YouTube TV. Morgan Stanley projects that a 14-day blackout could cost that company $60 million in lost revenue. It highlights the growing power of YouTube TV, which has become one of the largest cable replacement services in the country, backed by Google's enormous financial scale. Disney CEO Bob Iger insists the deal offered to YouTube TV is equal to or better than what other distributors receive. But he also emphasized that Disney must secure terms that reflect the value of its channels, a value that both YouTube and Alphabet have acknowledged privately. Iger's contract expires in 2026, with his successor expected to be announced next year, adding even more pressure on Disney leadership to resolve the dispute without giving up leverage. Inside the company, executives say they have already prepared for a long negotiation. Disney's chief financial officer revealed that the company built a hedge into its forecasts, anticipating that talks could drag on. Despite the disruptions, Disney announced a 50% increase to its dividend and doubled its share buyback plan to $7 billion for fiscal 2026. Operationally, the picture remains mixed. Profit from traditional TV dropped 21% to $391 million, while ESPN's income also declined. Streaming, however, posted a 39% rise in earnings, with Disney Plus and Hulu adding 12.5 million new subscribers, bringing the total to 196 million. Theme parks performed strongly as well, with profit up 13%. The question now is how long the blackout will last and which side can withstand the financial and strategic pressure longer. For Disney, every week delivers mounting losses, for YouTube TV losing marquee sports content risks, angering loyal subscribers. But with negotiations stalled, the stalemate could continue. That's all in Finance Buzz for today. Follow the Finance 360 for more updates.